Hey everyone, it's me, Ricky J, the Realtor, and I'm sure you've all heard about the Prime Minister, Justin Trudeau, resigning. If you've been following the real estate or investment space, you might already know about the proposed changes to the capital gains tax. But now with Trudeau stepping down, there's a lot of uncertainty about whether these changes will actually happen. Let's break it down. So back in June 2024, the Canadian government proposed changes to the capital gains tax rate. Basically, they want to increase the taxable portion of capital gains from 50% to 67%. For individuals, this applies if your annual capital gains exceeds $250,000. For corporations and trusts, though it's more straightforward, 67% of all their capital gains would be taxable. This change could have a big impact on investors and businesses, especially those in real estate and stock markets. Now, even though this change hasn't officially become law, it hasn't received royal assent yet. The CRA is already acting as if it's real. Since June 25, 2024, the CRA has been using the proposed 67% inclusion rate to calculate taxes. They're planning to issue updated tax forms by January 31st, 2025. And if you're a corporation or trust with a tax filing deadline before March 3rd, 2025, they're offering some interest and penalty relief. So yeah, they're moving full steam ahead despite all the political uncertainty. Here's where things get complicated. With Trudeau stepping down and Parliament prorogued until March 24, 2025, the bill is in limbo. If Parliament doesn't pass the proposal when it resumes, or if the new government decides to scrap it, the CRA will stop administering the changes. And if that happens, taxpayers who already paid based on the 67% rate might be eligible for refunds. So this whole situation is basically a waiting game. But there's more. The CRA has clarified that they can't force taxpayers to use the proposed inclusion rate if it doesn't benefit them. That means technically you should follow the current enacted laws, which still set the inclusion rate at 50%, unless the proposed rate works better for you. Of course, if the proposal gets royal assent later, any unpaid amounts could accrue interest. So if you're in this situation, talking to a tax professional is a must. All I know is you better have a good accountant. So what happens next? Now let's look at the bigger picture. With the possibility of a spring election and a new government, there's a real chance that this proposal could get scrapped altogether. But if this does move forward, it could bring major changes to how we approach investments, especially in real estate. For now, the CRA is recommending that taxpayers calculate their taxes using the 67% inclusion rate. It's not ideal, but it's a safer bet until we have more clarity on this. All right, let's put this into perspective with an example. Say you sell an investment property in 2025 and make $300,000 in capital gains. Under the current rules, 50% or $150,000 would be taxable. But with the proposed changes, it gets more complicated. The first $250,000 would be taxed at 50%, but the extra $50,000 would be taxed at 67%. If you're a corporation, though the entire $300,000 would fall under the 67% rule, it's a big difference and could seriously impact your financial planning. So what should you do? Keep an eye on the news, especially once Parliament resumes in March. And second, make sure you're filing your taxes based on CRA's current guidelines. If the proposed changes don't pass you, you can always apply for a refund later. Most importantly, talk to a tax expert. They'll help you navigate all the what ifs so you don't end up overpaying. Quick disclaimer, this video is for informational purposes only and does not constitute financial, tax, or legal advice. Always consult with a qualified tax professional or financial advisor to discuss your specific situation and ensure compliance with applicable laws. And if any of you are planning on making the move to the Surrey, BC area or anywhere in the Fraser Valley or Metro Vancouver area, pretty much anywhere in British Columbia, don't forget to give us a call. The number will be in the description below. We absolutely love getting reach outs from every single one of you. So please make sure to call, text, or email us if you're planning on making the move out here or around the area. You can also schedule a call or meeting using the link in the description of this video below. All right, so that's the latest on the capital gains tax and what Trudeau's resignation means for all of us. If you've got questions, drop them in the comments below. And hey, don't forget to like, share, and subscribe if you found this video helpful. Don't forget to check out our next video dropping. It's called What's Happening in the Surrey, BC Real Estate Market. I'm Ricky J, the Realtor, and I'll catch you on the next episode.